Hello, everyone. Now, this is going to be your last chapter for the company or company law, and that is the Companies Act 2013, where we're discussing the chapter 13 from the textbook, Companies Incorporated Outside India. So basically, this is the chapter 22 of the Companies Act 2013. So we have discussed regarding the chapter numbers, right? Like chapter 1, 2, 3, 4, based on the PAIR Act. Like that, if you look at the Companies Act 2013, you will see chapter 22 is the provisions regarding companies incorporated outside India. Now, basically, why is this included in your syllabus and what you have to know here? Very simple points are given. First of all, you should understand what is a foreign company, which you already know. Then if there is a POB in India, then based on that, what all documents you have to file with the registrar of the companies? What type of books of accounts you have to maintain? Are you required to get them audited? What kind of financial statements you have to maintain? Okay, what should be the law prevailing about the way in which financial statements have to be prepared? When you issue the debentures, what provisions will be applicable? If deposits are raised, then what are the provisions applicable? Do you also have to create a charge whenever an asset is given, or register the charge whenever charge is created on the asset? So basically, these provisions are not difficult. You simply have to connect with what you have already studied, and with little modifications because they are foreign companies. Okay, we have to understand few criterias and learn them. Why I call this to be important is because first time something like this has got introduced to CA intersyllabus. So see that all the questions that we are doing now, see that you please study them properly because they are definitely relevant for the exam point of view and they could be tested. Something new is always important. So this chapter, please do it very well. Okay. So let's get started. Page number 276, chapter 13, companies incorporated outside India. And as per the Companies Act 2013, it is chapter 22. Okay. Now, section 2 plus 42, you already know definition of a foreign company. A foreign company is a company incorporated outside India, having a place of business in India. This POB could either be physically or it could be through any of the electronic medias, or virtual presence also is acceptable. They might be operating by themselves or through their agents, no problem. If there is a physical presence here or even a virtual presence here, then in that case, we call them to be a POB in India. So company incorporated outside India and has a POB in India, whereby itself or through an agent, physically or through electronic mode, or conducts any business activity in India in any other manner. I told you why the residual provision is brought. Tomorrow we have no absolute idea about what new kind of business way can come. So if any new way comes in and business has been carried out here by the foreign companies that is incorporated outside India, then it might not cover in our definition. So now only it is told by any way you carry the business activity, we'll call it to be POV in India. Okay, then 380 documents to be filed, mark it important for examination. Documents to be filed means you are a company incorporated outside India. You have a POB in India. So imagine you are in UK, incorporated as per the UK laws, and in India, you're having an office in Chennai. Correct? That means to the Tamil Nadu ROC. Okay, what is the document that you're supposed to file? So that is the discussion. First, list of directors and secretaries containing details like name, address, occupation, nationality, etc. List of directors and secretary giving their personal details. Okay, that you have to give. Certified copy of its constitution. Okay, like how you have memorandum article like that. Certified copy of its constitution, charter, statutes, MOA, AOA in English. If not in English, then certified translated copies. Now, if it is having in different countries, obviously the different countries' languages, the way in which they're formatting the documents and all could be in different language. But in India, when you're filing with ROC, it has to be translated copy, that is English copy. Full address of the registered office or the principal office, which is outside India. Name and address of the authorized person. Understand AP is the person who in India is going to take the, all the activities control. That is, he's the person to whom you're going to communicate with. He will be responsible for all the action, services, everything. So that person is considered to be authorized person appointed by whom? The main company, the head office. Name and address of the AP resident in India for accepting services or notices on behalf of the company. So who's acting on behalf of the company. Full address of the office which is deemed to be the principal place of business in India. So you give head office name, which is in different country, plus in India, which is your principal office. That. Then, eligibility, none of the directors or authorized person should have been convicted or debarred from the formation of the companies and management of companies in India or abroad. So you also have to file a certificate where you're telling very clearly, none of the directors or these authorized persons are disqualified. That means they're convicted or debarred from being appointed, okay, for formation of companies or management in India or abroad. Okay, so they are telling Here they've used a short form scrape, and I would say that the scrape use it because this answer you have to remember for exam. S is standing for the list of all the directors and secretary. C is standing for giving certified copy of the constitution, statutes, charter, MOA, AOA, all the documents that were in English, if not translated copy. R, registered office full address. A, authorized person details have to be given. P, principal office in India. E is talking about eligibility, wherein you have to tell that you are not disqualified or not debarred or convicted for conducting any business operation or maybe managing any company or formation of any company. Clear? So that is considered to be documents to be filed with whom? ROC. Okay, now how to file and when? ROC means 30 days, that criteria, you know. And here you'll have the form number FCs, foreign companies. Scrape should be filed. That is all the above documents have to be filed with the ROC within 30 days of the establishment of business in form number FC1 plus Ps plus attested copy of RBI approval. Now, RBI approval might not be required for every company, obviously. If you are into banking transactions or which FEMA requires, then in that case, RBI approval will be required. Others at least intimate to the ROC that we are not required to obtain any RBI approval. And then they say attested copy of RBI approval under FEMA or other regulators if required, or else declaration from the authorized person that such approval is not required. So you have to file scrape, you have to file along with the prescribed fees, okay, and also a certified copy of RBI approval. If not, then in that case, if the approval is not required, okay, that means if approval is not required from RBI, that is a declaration that we are not required to get the approval. Okay, then. So that was a very important question for the examination. Documents to be filed with whom? ROC within 30 days, form number FC1. And documents to be remembered, what is the mnemonic? SCRATE, SCRATE. Section 380, subsection 3. You remember 380 series somewhere we had discussed. You have to file documents, file the financial statements as per section 381 and all that. Then I told you that these are all the provisions connected to foreign companies. How they have to file financial statements, etc. and all. So 380 series we know because it's all about foreign companies. And the entire 380, 386 and all that, the series is covered by chapter 22. That is companies incorporated outside India. Okay. Now, if you make any alteration to any of the scripts above, okay, then in that case, you have to inform that also to ROC within how many days? 30 days. Changes have to be informed in FC2. Then place of business includes share transfer office and share registration office. Meaning is if suppose a company does not have any trading activity happening here, any services not provided here, nothing is there. But there's a UK-based company which is having the share transfer office. Share transfer office is an office where people transfer their shares acquired in the company from one person to another. So these are the registration offices where you go to the office and you transfer your shares. That means you sell your shares to another person through this share registration offices, the transfer offices. So if the company has no business activity but has a share registration or share transfer office, then also we call it to be a POB. That means that becomes a what? For Indian company, it is a foreign company. Place for India, it is a foreign company. Place of business includes share transfer office and share registration office only. That particular office which is doing only the work of share transfer and share registration. Even then you'll call it to be a POB. Now, section 379, application of act to the foreign companies. Now, I told you entire chapter 22 will be applicable. And look at the chapter 22 series. Section 380 to 338, 386, both inclusive. That is 380, 1, 2, 3, 4, 5, 6. And section 392 and 393. So remember the sections 380, 386, all of them. And then 392 and 93 shall apply to all the foreign companies. Now, second point, mark it very, very important for MCQ. Okay, you will be tested on this. If in a foreign company, more than or equal to 50% of the paid up share capital, be equity share capital or preference share capital, is held singly or jointly by whom? Indian citizen or by body incorporated incorporated where? In India. That is either Indian citizen is holding or a body corporate in India. Body corporate LLP or anybody, company also in India. How much? 50% or more. Where? In the foreign company. Then to that foreign company, all the provisions of chapter 22 will be applicable, undoubtedly. That is 380 to 386 and 392, 393 will be applicable. Apart from that, all the other provisions will be applicable as if it was an Indian company only. That is important point here. Such foreign company shall comply with the provisions of chapter 22 undoubtedly, and such other provisions of this act as may be prescribed. Not all, obviously in rules they'll mention which all. With regard to the business carried on by it in India, as if it were a company incorporated in India only. So not all the sections, obviously, but obviously in the rules they'll prescribe certain more sections wherein you have to comply them as if you are an Indian company only. Okay. So they're telling 50% or more of the paid up share capital either held by Indian citizen or body corporate incorporated wherein India. If that is the case, chapter 22 applicable only. But along with that also what? See, why chapter 22? Because incorporated outside India. But you're telling majority is coming from where? India. So there are certain provisions which will be given by the rules, which will be applicable as if you are an Indian company. Some examples of how to decide this you can very easily understand. If there is a share transfer office in India and the main office is in Singapore, then also it is a POB in India, so it is considered to be a foreign company. UK incorporated by Indians, but no POB, but incorporated by whom? Indians, considered to be what? Foreign company. France, shareholding certificate, like shareholding is by Indian citizen, no POB. Again, it is what? Foreign company, because control is coming from here, 50% or more is from India. Then in New Delhi, Chennai, Mumbai, if the POB is there, obviously it is going to be a foreign company. Now, next, section 381, we have come across earlier also by section 381. Okay, where we were discussing about, having extension of financial year period or changing the financial year. Okay, that time we have discussed this point that if it's a foreign company, then if they're required by section 381 and all for preparation of financial statements other than the, financial year by India. So they'll be following calendar year. For that purpose, if you want to, change it, then you have to take permission from regional directors and all. So that time we came across a section called 381. Same thing here. Accounts of foreign company, they'll be asked them to prepare in calendar year criteria, January to December. According to this section, every foreign company shall, in every calendar year, make out a balance sheet and profit and loss account in such form, containing such particulars and having attached or annexed thereto such documents as may be prescribed. So balance sheet P&L, okay, as per the format given, along with notes to accounts. And deliver a copy of these documents to whom? ROC. Undoubtedly, you have to inform whom? ROC. According to Companies Registration of Foreign Companies Rules 2014, every foreign company shall prepare financial statements of its Indian business operation in accordance with the Schedule 3, as far or near thereto, for each financial year, including documents that are required to be annexed, should be in accordance with Chapter 9, that is Accounts of Company. Accounts of Company means complying with Section 129. The documents relating to copies of latest consolidated financial statements of the parent foreign company as submitted by it to prescribed authority in the country of its incorporation under applicable laws there. That means they're telling you have to send all this to ROC. One is you have to prepare as per, it is not for everything, it's only for business operations in India. And here the word uses financial year, not calendar year. So for business operations in India, for every financial year, you have to prepare as per the Schedule 3. And even this consolidated that you have prepared, that also has to be given. That is very important here. So that you have to prepare as per Schedule 3, Chapter 9 has to be complied with. Every foreign company shall prepare financial statements of its Indian business operation in accordance with Schedule 3, as near as possible to each financial year, including documents that are required to be annexed to with Chapter 9, notes to accounts and everything, and documents relating to copies of latest consolidated financial statements. Okay, which you have prepared as per the requirement of the law where a foreign company head is, holding company is. Clear? Then. The central government is empowered to direct that in cases of any foreign company or class of foreign companies, the requirement of clause A. What is clause A? Make out balance sheet P&L. Okay. Of section 381 subsection 1 shall not apply or shall not apply subject to certain exceptions and modification as the case may be. So sometimes central government might not require them to prepare balance sheet P&L for every calendar year. Okay. But depends upon the requirement, modifications and all. If any of the specified documents are not in English language, a certified translation thereof in English language shall be annexed. Every foreign company shall send to the registrar, along with the documents required to be delivered to him, a copy of list in a prescribed form of all place of business established by the company in India, as at that date, with a reference to which balance sheet date was prepared. That means you prepare balance sheet, you prepare P&L, you prepare all the notes to accounts, all the other requirements, you do it. Along with that, one more paper you have to attach. What is that paper? All the POBs in India. As on what date? As on the balance sheet date. If the balance sheet date is 31st of January, 31st of December 2023, then as on 31st December 2023, all the POBs that you have in India, a list of all of that has to be given. Compulsory to the registrar. According to the Companies Registration of Companies Rules 2014, every foreign company shall file with the registrar, along with financial statements in form FC3, with such fees as may be provided under Companies Registration Office and Fees Rules 2014, a list of all POB established by foreign company in India as on the balance sheet date. Here only the form number has been mentioned, FC3. Every foreign company shall, along with the financial statement required to be filed with the registrar, attach thereto the copies, namely, statement of RP transactions, statement of repatriation of profits, repatriation is transferring back to the foreign company. Whatever you have earned in India, it's sending it back to the foreign countries. Statement of transfer of funds, including dividends, if any. These three could be tested to you. So understand, along with the financial statement, these three statements have to be given. Statement of RP, statement of repatriation of profits, and statement of transfer of funds. All these documents shall be delivered to the ROC within a period of 6 months of the close of financial year of the foreign company to which the documents relates. Don't you think all their annual transactions and all like annual returns? So because of that 6 months period, remember. Okay, so properly you have to file it. They're all data to be given. Okay, your annual general meeting criteria they're not mentioning. So within a period of 6 months. The accounts of foreign company pertaining to Indian business relates to the preparation of 381 subsection 1 and rules made thereunder will be audited by a chartered accountant, practicing chartered accountant, or LLP of a practicing chartered accountant. So obviously foreign company also is subject to audit and they'll be audited by Indian chartered accountants practicing or LLP practicing. Okay, chartered account having chartered accountants in practice. Okay, so very simple things. Normal first they're telling you prepare it for every calendar year. For Indian business schedule 3 and as per the chapter 9, they can exempt certain class of companies of preparation balance sheet P&L for every calendar year. It should be English language. Along with that, you have to also give the details regarding, all the documents regarding list of POB. It should be given in form FC3. Along with that, you give statement of related party, statement of repatriation of profits and transfer of the funds, including dividends. All this has to be given within 6 months of the close of financial year. And then they also tell that all of these LLP's accounts have to get audited by, in India, by practicing chartered accountants or firm of LLP. That is LLP of a chartered accountants practicing. Then next is display of name, etc. of foreign company. Additional disclosures to be made by foreign company. You know, when we discussed about publication of name in Companies Act, and then we discussed that outside the name of the company, there should be a board affixed, a painting and all affixation will be there, where name will be mentioned of the company, address and everything. Now, it's a foreign company, then you have to also mention, okay, we are foreign company, we'll write our name, but you also tell where our head office is. And understand in foreign companies, limited liability concept is there. Like when some of the members' liability is going to be limited and all. So in that case, what is the liability limitation? Everything will be there. Additional disclosure to be made by foreign company. Name of the company and the country in which it is incorporated should be exhibited outside every office POB in English plus local language. Should be stated on all letterheads, bills, invoice, notices, any official publication, etc. in English. So outside the office, you have to give it English and local language, and all billheads and everything will be given in English. If liability of a member of a company is limited, that is obviously in India, so it's very common there we're talking about, should be executed outside every office or POB in English and local language, and all on every state and every prospectus and all the letters, bills and everything in English. For liability of being limited, prospectus is included here that you have to take into account. So only outside extra things have to be written. That is where you have incorporated, that has to be given. Name will be given anyway, but here incorporation place also you have to give. Service of notice on foreign company will be done at the main office here. It will be done by speed post, registered post, all of that. Basically, any document required to be served on the foreign company shall be deemed to be sufficiently served if it is served to any person who is authorized to accept the service, that is authorized persons, on behalf of the company under section 380, either by post or electronic mode. So you have to give it to whom? AP, authorized person. 384, charges. Foreign company should file returns with respect to creation, modification, satisfaction of charge, annual returns, books of accounts, everything to ROC. You have to do that. Same, whatever you have done in local companies, regular companies, when you create a charge, you inform ROC. When you modify the charge, you inform ROC. When you satisfy the charge, you inform ROC. Annual return, you file with ROC. Books of accounts, you file with whom? ROC. So their inspection, everything is done where? By we have to tell ROC everything. So basically, here also it is told the same thing. That in these cases, basically not books of account, financial statement basically. Here also they're telling foreign company also have to require to do the same thing. So mutatis mutandis applicable. According to this section, the provisions of section 71, issue of debentures shall apply mutatis mutandis to foreign company. The provision of section 92, filing and preparation of annual return, shall subject to such exception, modification, and adoption as may be made therein under this act apply to foreign company as they apply to a company incorporated in India. According to Companies Registration of Foreign Company Rule 2014, every foreign company shall prepare and file annual return in form FC4 along with prescribed fees within a period of 60 days from the last date of its financial year to the registrar containing particulars as they stood at the close of the financial year. Please mark it very important for MCQ. FC4 timeline is what? 60 days from the last day of the financial year. Your AGM concept is not there. So we don't say 60 days from the conclusion of AGM. 60 days from the close of financial year. The provision of section 128, books of accounts, everything, shall apply to foreign company to the extent of requiring it to keep at its principal place of business in India. The books of accounts referred to in that section with respect to monies received and spent, sales, purchases made, assets and liabilities in course of in relation to business in India. That means section 128 we say books of accounts have to be maintained at the register office. correct? But here you have to maintain where the principal place of business. But you are going to maintain books of accounts of not of the company as a whole, but only of those sales, those transactions, those assets and those liabilities which are belonging to this particular business in India. So whatever is Indian sales, Indian transactions, Indian purchases, Indian assets, Indian liabilities of this foreign company, only those will be maintained where? In India, in the books of accounts. The provision of section 135, that is corporate social responsibility, shall apply mutatis mutandis to Indian business of foreign company as they apply to company incorporated in India. Same thing it is, because they're getting benefit from India, so it will be applicable to foreign company. The provision of chapter 6, registration of charges, will mutatis mutandis apply to even foreign companies. That is, they have to create charge, register with ROC within 30 days, etc. The provision of chapter 4, inspection, inquiry, 14, inspection, inquiry, investigation, shall apply mutatis mutandis to Indian business of foreign company as they apply to company incorporated outside India. Meaning is ROC can carry on investigation, inspection, okay, tribunal can call for it. All of that will be applicable as it is in an Indian company. Then, fee for registration of documents. There shall be paid to the registrar for registering any document required with the provision of this chapter to be registered by him, such fees as may be prescribed. And fees, we know which rules are there. According to Companies Registration of Foreign Companies Rules 2014, fee to be paid to the registrar for registering any document relating to foreign companies shall be provided in Companies Registration of Office and Fees Rules 2014. This fee name you have seen every time whenever we discussed about payment of fees to ROC. So every fees payable to ROC will be given where? Companies Registration of Offices and Fees Rules 2014. Okay, so any fee you pay to ROC will be determined here. Even in the case of foreign companies, when they're filing any document, fee criteria will be coming from these rules. Then comes to interpretation. They have given you certain words, how you interpret them. For the purpose of foregoing provisions of this chapter, the expression certified means certified in the prescribed manner to be a true copy or correct translation. Wherever certified means in India, how it is considered to be a true copy, that is considered to be certified copy. Director in relation to foreign company includes any person in accordance with those whose direction or instruction the board of directors of the company is accustomed to act. In relation to a foreign company includes any person in accordance with whose direction the BOD is accustomed to us. POB includes share transfer and registration office that we have already discussed. POB will include means what? These also will be there. Any other business also is there, but this also is inclusive. So if you have only a share registration office, that also will be included. POB. Not much important here. You can just have an understanding. Section 387, dating of prospectus and particulars to be contained therein. We'll take it in the next video.